Hi guys, welcome to this Moneycontrol live stream. You're watching Earnings Express with me, Nandita Khemka. Well, TCS has reported its numbers a while ago. Although it was a margin beat, but it was a mixed quarter, so to say, given the fact that the revenue growth was modest. Although margins, as I mentioned, has topped expectations, came in at 26% vis-a-vis expectations of 25.3%. That was the big beat, aside of the fact that deal wins are at record. For the quarter gone by, $13.2 billion vis-a-vis $8.1 billion in the last quarter, and for the full year, deal wins have topped that $42 billion mark. If you look at attrition rate, that has come to 12.5% vis-a-vis 13.3% on a quarter-on-quarter basis. The constant currency revenue growth has come in at 1.1% vis-a-vis expectations, Moneycontrol expectations of 1.5%. But let's decode the numbers and bring on board the guests who are joining in this evening. Sreeram Ramdas, who's the Vice President at Green Portfolio PMS, as well as Mayuresh Joshi, who's the Head of Equity Research at William O'Neill, joining in. Great to have you with us this evening. Mayuresh, let me come to you. First take on the numbers, and secondly, in a weak market, TCS managed to hold on and ended off day's lows. In fact, it ended in the green, 0.5% higher. Do you think the markets had a whiff of the fact that margins could be, a big beat? It's at a 3-year high.
Evening, Nandita. Always a pleasure to be on your show. I don't know whether the street had a whiff, but I think the margins were definitely better, Nandita, than what most analysts on the street had pegged. So 25 and a half, that was the expectations for the margin band. At 26%, I think has been a clear outperformance as far as the operating performance has been concerned. To top that up, as you rightfully said, the TCVs at $13.2 billion have been significantly higher. And therefore, if you probably look at a lot of the geographies which have contributed to this, UK has done exceptionally well. The other regional areas have done reasonably well as well, and so has Latin America. North America is the only market which has probably lagged. And within that also, BFSI is something which is still remaining to be a soft part. However, I think the expectation largely now that is getting baked in is that over the next couple of quarters, BFSI should start coming back slowly and steadily as far as the North American markets are concerned. And the other legs, including retail, including manufacturing, are holding up pretty well as well. Looking at how data points are probably shaping up, both in North America, in Europe, and other parts of the globe as well. So apart from the revenue growth, which was at par or a tad bit below expectations in CC terms, I think most of the other parameters have probably done a lot of talking as far as the numbers are concerned. And therefore, I think a good set of numbers, in my opinion, that TCS has delivered.
Right, a good set of numbers, no negative surprises as well this time around. But Sreeram, coming to you, want to get in your first take, and would you concur with Mayuresh that the recovery in North American markets, BFSI segments that have been a pain point, would start kicking in the first half of the coming fiscal FY25?
I think the BFSI segment, especially from the US, it would take time to bounce back, because they are in for a couple of quarters more of trouble, I would say. Because if you take the main segments where TCS derives its revenue, around 37-38%, even in this quarter, came from BFSI. So BFSI is a huge segment. No matter, if manufacturing is increasing, if life science segment is increasing, even if others energy segment is increasing, if the BFSI is lagging, it's a big issue for TCS in the coming quarters, for the IT sector as a whole, in fact. So it would take a couple more quarters for this BFSI segment to come back. But like the previous participant mentioned, this number is really great because what the street was expecting, especially after Accenture's result, was that IT sector is in a very timid stage. And TCS was going to come up with a downside surprise, which clearly wasn't the case. Even though the revenues grew by 1% or below 1%, their margins was on the higher side, attrition rate reduced, which all in all, this is a good result.
Right, a good results. But, investors overall have a relatively low allocation or investment in the IT sector, right? Sreeram. But and if you look at domestic institutional investors, the allocation to this sector is particularly low. But now looking at TCS results, would you advise clients to look at nibbling into some of these names in the IT pack? And if yes, what would your pecking order be?
Firstly, the DIIs having a low allocation to IT sector is very prudent. And no, I wouldn't suggest an extra allocation to IT right now, because if you see the valuations, you compare it to pre-COVID levels. Currently, the BSE IT index as a whole is trading at around 31, 32 times price to earnings, while pre-COVID it was around 19 and 18. So tell me what justifies this sector to have a 50% above average valuation? The growth that we're going to be seeing is maximum 3 or 4%. Even the best players in the sector, the tier 1 players, TCS, Infosys, HCL or Wipro, they'd be not doing more than 6 or 7%. So what justifies a 31 times price to earnings? So my point is, results were good. Even for the other 3 tier 1 players, we can expect above street expectation results. But valuations have priced this well, meaning it's been priced in way too well.
Right. Coming to you, Mayuresh, would you say that valuations have priced in good results for the mid-cap IT basket as well? And perhaps would you advise investors to play the IT theme via the mid-cap names vis-a-vis the large-cap names, where the recovery is still some time away?
So I think if you break this up, Nandita, into large cap and the mid cap space, the mid cap IT companies have outperformed the large cap peers by a huge margin. Nonetheless, to say, I think the valuations are a tad bit above key median averages for most players within the space itself. Again, I think the outperformance has been based on the fact that order will still continue for the mid cap space. A few of the mid cap IT ER&D companies have done exceptionally well in a period where most IT companies have probably lagged both in terms of order flows as well as margin pressures. And that is where I think the outperformance has probably come through. But I think as you enter into FY24, FY25, the high base that has now got created to continuously outperform over the next couple of years on that high base would be a tad bit difficult for most companies. The markets are probably penciling in mid-cap IT valuations where growth will probably continue at a very fast accelerated pace. And therefore, you probably might need to be cherry picking within the mid-cap IT space as well. You can't paint the whole mid-cap IT sector with the same old brush. Most companies might do well, but some companies might also lag in terms of earnings delivery. For most companies that will do well, Nandita, however, I think valuations are through the roof as we see it at Markets with India. A lot of these stocks are in late stage basis, which coincide with the supernormal valuations that they're probably deriving at this juncture. Any earnings miss or an execution delay might just pull down these stocks quite dramatically. So, in my opinion, again, I think you need to be very, very selective in the mid-cap IT space. Persistent is something that we continue to hold in our global portfolios. But I think it's no way that you should go out and buy, because we've probably got into those stocks at much lower levels.
Right, Mayuresh, another point I want to really make is that looking at the numbers, looking at deal wins, looking at margins, would you be tempted to revise the FY26 EPS estimates, given the fact that, I was reading a report by BofA Securities just a few days ago where they said that FY26 revenues would be aided by, the banks upgrading, their SAP systems and higher spending on Basel III norms as well. That would boost IT spends, and transformational IT spends are expected to kick in post the US presidential elections. So, looking from that standpoint, would you be tempted to revise your EPS estimates higher for some of these large cap IT names now?
So, Nandita, that's for me?
Yeah, that's for you.
Yeah, sure. So I think, as I mentioned, I think the second half of this calendar year is somewhere where the recovery will start coming through for segments specifically like BFSI. And yes, you've got a major event like the US elections coming through as well, which coincides in terms of the second half or Q3 numbers in the Indian context as well. Having said that, I think the expectations largely in terms of IT spends and discretionary IT spends in particular, post the Accenture numbers, is somewhere where the street was a little bit perturbed. Whether this goes down, whether the client decision making and gets delayed, and the pricing probably gets delayed as well. So to that extent, I think if you pencil all this in and you start expecting some element of recovery starting in the second half of this calendar year, a large part of the expectations in terms of baking in better numbers for the second half of 25. And again, I think better numbers for 26, because you will then be working out with a lower base or an average base in a base case scenario, as far as most IT companies, specifically the tier one companies, are concerned, to probably outperform numbers on an FY26 basis as well. Yes, implementation in terms of systems, new products in terms of AI, automation, all these elements are going to take place. So yeah, I think baking in for a second half recovery.
Right, Sreeram, coming to you, of course, we have Infosys results on the 18th, right? Last quarter, we saw Infosys tweaking both their ends of the guidance, right? But this time around, Street is penciling in guidance ranging between 2 to 6%. Would you expect something similar? And secondly, although you've said that valuations bake in all the recovery possibilities, for Infosys in particular, given the fact that it is available at a discount to TCS, do you think that looks better from an investment standpoint now?
Comparatively, yes, Infosys would look better. But now results, any order realization above 3 billion would be considered a big positive. But then we need to see. But to answer your question, I would say Infosys is a better pick compared to TCS at the moment.
All right. Mayuresh alluded to the AI opportunity, but it's at a nascent stage. Sreeram, this question is for you. Of course, on the AI front as well, TCS has also, been winning deals, right? But for that to translate into any meaningful, contribution to revenues, do you think that that's still some time away? Because, it's still at a nascent stage, as I mentioned. So no meaningful contribution expected from AI just yet?
It's the growth that matters rather than the absolute numbers for AI revenues. And TCS has clearly said that they have not started to state the revenues coming from generative AI as of yet. So once they start presenting these numbers, depending on the growth, the stock would also react positively depending on the growth.
Hello and welcome. I think the Infosys press, I beg your pardon, the TCS presser has
of TCS,
just about started. Let's cut across to where the management will be speaking and giving us the outlook for FY25 as well.
Joining in online as well. We are live on all our social media platforms. We're going to start with introducing the management, and then we start with the opening address. We have with us K. Krithivasan, MD and CEO, our COO, NGS, Samir Seksaria, our CFO, and Milind Lakkar, our CHRO. We start, as always, with the opening address by Mr. K. Krithivasan. Krithi, the floor is yours.
You can use it. Thank you, Kritika. Good evening, everyone. This has been a quarter of strong deal wins and execution for us. Our revenues grew by 2.2% year on year and 1.1% quarter on quarter on a constant currency basis. On a year on year basis, our rupee revenue grew by 3.5% to reach 61,237 crores. Our continued focus on operational excellence helped us achieve an operating margin of 26%, representing a sequential expansion of 98 basis points over Q3. With this, our operating profit stands at rupees 15,918 crores. Our net margin for the quarter has come in at 20.3%, translating to 12,434 crores. Again, this is an expansion of 90 bips of net margin. Consequently, our EPS has reached 34.37 from 32.14 in Q3. Cash from operations stands at 12,480 crores, which is 100.4% of net profit. The new growth markets of India, Asia Pacific, Middle East and Africa and LATAM had a very strong growth, validating our approach of portfolio diversification. Especially our revenue from India grew by 37.9% year on year. Among the major markets, UK grew by 6.2% in spite of economic environment. North America degrew by 2.3% and Europe by 2%. reflecting the overall market uncertainties in major markets. Among the verticals, manufacturing continued to have a strong growth. Manufacturing grew by 9.7% and energy, resources and utilities grew by 7.3%. Our platform business also had a strong growth aided by recent wins. Banking, tech and services and CMI continued to have negative growth. Our customer metrics continue to improve. The number of customers from whom we make more than 100 million rose by 2 to 62 customers on a year-on-year basis. There has been strong customer movement across all other bands also. In addition, our customer base of million plus stands at 1,294, an increase of 53 over last year. Our deal wins were at an all-time high this quarter. Our order book closure for the quarter stands at $13.2 billion. This represents a year-on-year growth of 32%. Our order book for North America stood at $5.7 billion, BFSI at $4.1 billion, and consumer business at $1.6 billion. Our attrition has moderated to 12.5%, and our headcount stands at 601,000 plus. On a full year basis, our revenue for FY24 stands at rupees 240,893 crores, representing a rupee growth of 6.8% and dollar growth of 4.1%. This amounts to 3.4% in constant currency. Our operating profit for the year is 59,311 crores at a full year operating margin of 24.6%. Our net profit for FY24 is rupees 46,585 crores at a net margin of 19.3% and a full year EPS of 127.74. Cash from operations stands at 46,932 crores, which is 102.2% of the net profit. For the full year, UK grew by a healthy 10.1%, while North America and Europe were flattish at minus 0.2% and positive 0.7%. Reflecting the strong growth throughout the year, India grew by 20%, LATAM by 12.4%, and Middle East and Africa by 14.5%. Among the verticals, banking degrew by 1%, consumer business grew by 1.8%, and manufacturing by 7.3%. In the same period, life sciences grew by 4.8% and ERU by 12.6%. In FY24, regional markets, which includes our platform business, had a strong growth of 19.8%. The board has proposed a final dividend of 28 rupees, amounting to about 10,130 crores. This is in line with our practice of returning 80 to 100% of free cash flow back to our shareholders. Subsequent to the launch of our AI.Cloud business unit, we are seeing an increased traction in the marketplace. We have won more than 200 engagements in AI so far this year. The number of engagements going into production is steadily increasing. Our AI and generative AI pipeline has doubled in the quarter to $900 million. Our investments on research and innovation continues. For the full year, we applied for 735 patents and were granted 1,041 patents. As you all know, our COO would be retiring next month after more than 40 years of dedicated service to TCS. Many generations of TCSers, including me, have been mentored by him. He has donned many roles simultaneously during his long career and has been a pillar of support for many of us. On behalf of all of us at TCS, I would like to thank NGS for his leadership, support and mentoring over all these years. We wish him all the very best. With that, I hand it back to Kritika and we'll open up for questions. Thank you, Kritika.
Thank you. We'll start with our question and answers. So let's start with Anisha Jain from ET Now.
Hi, good evening. Thanks, gentlemen. Let me take the liberty of reshuffling in which order we pose the question usually, because it's NGS's last earnings PC with us. NGS, this $13.2 billion blockbuster number of deal wins, was this like a farewell gift or a parting gift for you from the team?
I would at least think so.
It's not going to be repeated next time? Because you won't be there, the farewell gift is done with? Is that what you're saying?
No, I think the overall, I think we are extremely happy with the way that the deal wins this quarter has panned out. Over the last 4 quarters, I think we look at about 45 billion plus. It's again an all-time high. for TCS. So what's more important is, I think this for 13 billion has come across markets, across industry verticals. It's very broad based. So we're extremely delighted with that. Yeah.
Extremely delighted with that, and thank you so much for being around, for your entire wise words and sage advice that we've got from you all this time. So I think thank you from everybody in media here.
Thank you.
But let me just move on and pose the questions to Kriti as well. Kriti, North America, BFSI, they continue to decline. Any indication that it's bottomed out and from Q1 there will be a steady recovery? And if not Q1, maybe Q2 for sure?
It's declined, but I would say it is a marginal decline. It's not a huge decline. So we believe that we are bottoming out. I don't want to call it like next quarter would be a blowout quarter or anything, but we should start seeing growth soon, because with a healthy pipeline for the last few quarters, we should start seeing growth.
Okay, start seeing growth. That's the hope. Very strong showing on the margin. You're knocking at the door of your long-term guiding beacon of 26 to 28%. Was there any one-off here, or break it down for us what really worked for margins and what's the sustainability of that? Q1, of course, there'll be a wage hike impact, but after that?
So at 26%, as you rightly said, we are touching the 26 or 28, which we have always believed in. And if you look at the 100 basis points improvement, breaking it down, disciplined execution, which was in spite of headwinds of 90 basis points coming in from higher third-party expenses and increased travel expenses, which was offset by 190 basis points coming in from bottoming out of subcontractor cost and productivity and utilization gains. No one-offs, and I think our focus will be to continue the operational rigor which we have set in place. And once the macro risks recede and growth comes back, that will only help us accelerate this journey.
So risks more skewed on the upside than downside, right?
Sorry?
Risks are more skewed to upside than downside, the risks.
The current macro risk is what I was talking about.
Okay. Milind, we hear that you're back at the campus. Is that true? Could you confirm that for us? And would that mean that Q1 will be a positive headcount number then?
One thing is that is true, and we are the first ones to go to campus. We already been to all the priority institutions already and made offers to all of them. And we right now are in the middle of conducting a nationwide qualifying test for us, NQT for us. So yes, there's a lot of buzz in the campus by us being there. We are seeing that. I'm very excited to get all these folks in TCS, this year in the FY25. The numbers, I've been talking about numbers. It's a resultant of many things: productivity, business situation, and what we are driving today in terms of internal, the investments which we made from the past. So it's an outcome of that. So we'll play it by the ear and see what happens.
Thank you. I'll hand it over back to you, Kritika.
Thank you, Anisha. Let's start now with Reema Tendulkar from CNBC TV 18.
Gentlemen, good evening, and NGS, we will truly miss you, and over the years we've all learned so much from you. But Kriti, just starting this Q&A with you, how would you classify demand and growth this quarter compared to your own expectation, and what about growth X of the BSNL deal? And are you a bit disappointed that we've not seen growth X of that accelerate?
I won't say I'm disappointed, right? Yes, when we started the quarter, we thought that that's actually talking about the uncertainty in the overall situation. When we started the quarter, we thought we probably would have another 50 to 100 basis point more growth. But the market's been uncertain, and there have been decisions taken at very short notice. But I'm not going to break it down with how much is BSNL contributing towards. I don't think we have provided that number. It's not a disappointment. We thought, as Samir would have told you, we always like to have much more. So in that sense, either 50 to 100 basis points, always would have been happier than this.
In your assessment, when does growth recover? Can it happen in the second half of the year? And NGS on this deal win, is it possible to break it up in terms of what was the contribution from short cycle deals? Because Accenture is talking about a pullback in short cycle, discretionary kind of deal. So some color on the deal wins.
It will be difficult to call, Rimon, when the growth would return. I don't want to hazard a guess. As I said, we've been actually now saying for second quarter, like FY25, we expect this to be a better year than FY24. But to say that the growth would return in Q1 or Q2 would be calling it too soon.
And just pure mathematically then, what will be the contribution of the recently won deals in FY24? In FY25, because of the deals that you won, how much better will it be a 200 basis points, 250, 300?
So we have not done that kind of math, but we did do a lot of check in terms of are the recently won deals, are they contributing to our revenue? They are contributing to our revenue, as we have been saying from now many quarters. I'm repeating myself. Like there are situations where the existing large programs get de-scoped, postponed. So that continues to happen. That's the reason for the uncertainty, sometimes lack of visibility. But otherwise, the deals that we won recently, we did in fact specifically check, and we did find they are contributing to the revenue.
NGS on deals. And Samir, one question. Since subcontracting costs have bottomed out, they will go up, right? If they've already hit as low as it can. So will it then act as a bit of a cap on your margins? Could that be a headwind? And Milind, on attrition and on hiring, what is your own expectation over the next 2 quarters? Thank you.
See, the overall deal, I think the 13.5 we've announced. One mega deal is there, which we also announced it. But barring that mega deal, the deal sizes are very, very mixed and broad-based. Most of them, and many of them are short-term deals, right, of much lower value, which is actually very good for us, right. What we are extremely focused on is to really see how we can conduct the first phase of the project, where a number of decisions related to what technology which we choose, what clouds that we will go and operate in, is there an opportunity for a private cloud, what kind of AI tools that we will embed in, and is this architecture that we are going to embrace, is it future-proof? Those questions are getting answered, and we are at it to see that that particular phase is completed very quickly. But having said that, the challenge is that there are 1,000 startups on AI coming up every day. So customers clearly look at each one of this and then try to choose which is the best one. And can I have an architecture in which I can quickly plug in anything that I want, plug out something I want? So I think we are at it to clearly accelerate the first phase of execution, define the architecture, convince the customer that it is the future-proof architecture on which we can go and accelerate the execution. So extremely focused on accelerating the first phase so that we can execute and pull revenue out of all these projects that we have contracted. And overall, again, thank you, Rima, for the kind words. And I think I've truly, absolutely enjoyed the interacting with all of you. And every such interaction has only made me wiser. Thank you.
Coming to fees to external consultants, we have been able to significantly reduce it from its highs. And even if you look at it from last Q4 to this Q4, it was upwards of 8% last year in Q4. We have brought it down to 4.6%. Yes, we believe it has bottomed out, and it's primarily linked to so we use business associates as a demand-supply mismatch. And as the macros have played out, we believe it has bottomed out and would start inching up. That's not the only margin lever, and we'll stay focused on our disciplined execution journey, and we'll have other levers to balance it.
See, we are at 12.5%, it's in our comfort band, but I still expect around, potentially 30 to 50 basis points drop going forward. On the hiring projection, we, like I said, every year we have training projections. We don't give projections for experienced hires. Training projections will be similar to what we have been doing in the previous years. And like I said, we already have gone to priority colleges and made offers to them. And we will actually now in the middle of putting the NQT test together for at a national level. So that will also bring in significant numbers for us. So I'm very excited about getting the campus hires coming into TCS, and experienced hires will get them as depending on the business demand.
Thank you. Shivani Shinde, Business Standard.
Hi, gentlemen. Good evening. Hi, Kriti. Everybody's asked, most of us have asked this TCV question, but could you give us what's been the boost to get this $13 billion, TCV? What happened in this quarter, if you could? Because you still, if you look at US, if you look at BFSI, it's still slow. So if you could make us understand that a little bit. NGS, what plans going ahead? And hopefully we'll obviously be in touch with you. Another one, Kriti, do we see TCS having a CEO role? Will that model continue? Samir, more headroom? Do we still see margin play? Do you see more improvement coming for this year? And Milind, do we assume the 40,000 number that is what average TCS does in terms of hiring from campuses? Will it continue? Also on the salary hikes, if you could just give us the number, what's been the average number? Thanks.
Shivani, on the TCV side, like NGS mentioned, excepting one large deal, this is made up of regular size deals only. So, but I think it's also, if you look at, though we don't publish a geography level or industry level TCV, almost every geography, every industry practice has had a higher TCV. It only represents what's happening in the market. Customers are, there are both kinds of deals, right? We keep talking about both the transformation deals as well as cost optimization deals. So there is a tendency on the customers to conserve cost and use that on transformation. So like, because they cannot delay the transformation while you're trying to conserve cost for long. So that I believe is that's what is happening. There is an acceleration of cost optimization, and slowly they're investing on transformation. As I mentioned, the TCV that we have been getting is yielding revenue as well. It is some of the old programs which get ramped down, that is decelerating or not helping us grow faster. So, but there is no specific one-off here on one specific theme that's driving the growth. But of course, as I mentioned, overall our Gen AI pipeline also has doubled. It's 900 million, but that's not the only reason for the growth. It's, I think, all-round customer interest in doing new things. On the COO part, as you know, he's been doing many things, and no one single individual can replace him. Our current thinking is our leadership team, we are distributing the work that he's been doing, and we don't intend to appoint a new COO for now.
No, I think as far as the deals are concerned, it's a lot of hard work, number one, right? I think I want to give that credit to the people in the front facing the market and facing the customers. And it's also demonstrate the superior value proposition and the, being with the customer in good times and bad times and listening to them. I think all that constitutes why we clocked 13.2 billion, of deals. As far as my plans, be the first one to cheer TCS from outside. Yeah.
So Shivani, on the headrooms, we'll always be happy with more. As we have said, we always believed 26 to 28 is where we need to operate in. If you look at where we are exiting right now at 26 is what we are very happy with. In the last 3 quarters, in each of the 3 quarters, we have been able to deliver sequentially almost 100 basis points in each of the quarters. So hope the journey continues.
So we plan to get to that number, 40,000. We'll see how it goes, but that is the plan right now as we go. With respect to wage hikes, yes, I'm very, very pleased to announce wage hikes for everyone starting April. And the wage hike will range from 4.5 to 7% depending on the performance, and then top performers getting double-digit hikes.
Thank you. Tushardeep Singh from NDTV Profit.
Hi, gentlemen. First of all, how are you seeing the ramp up of deals happening in the US at this point of time? Is the conversion still taking time from the signing of a deal to actual implementation? What are the kind of deals that are coming in? Are you targeting larger deals spanned out over several years, or are discretionary deals trying to come back at this point of time? What are the client conversations like in that case? A second question will be your client mix. You have 62 clients in the 100 million band. That's only 2 up year on year. 139 in the $50 million band. So are you trying to target, what will be the target where you get at the clients at this point of time?
No, I think I would say that deal ramp-ups, as I explained, I think there are deals of all sizes. And we see several small deals which need to be executed, let's say within a year, constitutes a good chunk, right? But having said that, customers want to make sure that the technology choices that they are making is the right choice. Second is, AI is something willy-nilly embedded into this whole thing, and there are larger questions to be answered in terms of what is it that will I use LLM, will I not use LLM? If I use LLM, will I put it inside, will I put it outside? So they're all very million-dollar questions that, there are no silver bullets at this point in time. So it takes time to do this, and we have to keep our options open and convince the customers that they have the ability to keep changing it as things get clearer. And that's what we are focused on, and we are executing it. There are multiple things, and we are extremely proud of the fact that, for example, how do we embed an algorithm in a smart contract in a blockchain? We got a patent for that. So we are embedding some of those things into our solutions. Type of deals are, for example, how do you quickly and optimize on the fly, do pricing of products and assortments in a retail segment, or how do we help aircraft maintenance engineers to do their job a lot more swiftly and predictably. So many such use cases have come, projects are getting executed. So as far as the ramp up of the deals are concerned, it is contingent on the fact that the first phase, how can I quickly do and then get on with it. But the non-discretionary ones, there are no issues. We go and take it. If, especially on optimization projects that we are engaged with, whether it is from vendor consolidation or otherwise, we don't see a problem. We are able to ramp up to the pace at which the customer wants. And the discretionary spend, these are all the situations.
See, on the client metric, we are quite happy. Like see, on a low growth year, we still able to get 2 more customers in the 100+ band, and we also increased in almost all the bands. Okay, so we are quite happy with the client conversion.
Thank you. Ashish from PTI.
So this is a follow-up to your comment about short-term deals being good ones for the company. So in the pipeline which you see, has there been any change on what you are chasing more aggressively? Because the longer-term ones probably are not ramping up the way you would expect them to. And second, on the India business, how much more muscle left? Would you sort of see similar numbers from India going forward as well? This is BSNL or beyond BSNL as well?
I think, we always said that, look, there is a good mix of size of the deals that are required, right? We need the mega deals, we need the larger deals, we need a good chunk of small, mid-sized deals, right? I think that trend is continuing, and we are happy with that deal mix that we are signing. And that's very, very broad-based across, if you take energy, resources, utilities, it's pretty much, on a strong growth wicket, right? That vertical is growing significantly for us. Consumer business, we have seen it I think, turned around, and this quarter is much better than the last quarter. And banking financial services, while it's a kind of a flattish, but we are happy with the engagements that we have, the kind of projects and discussions that we are having. About 4 billion plus worth of TCV in this out of the 13 billion is coming from BFSI. So we have no concerns per se with respect to the opportunities that we see in the market, whether it is on the cost optimization side or on the transformation program side. And we are engaging with each one of this, and we are converting those deals, right? So there is no dearth of opportunities per se. The execution, people are taking time to pace it out, especially on the non-discretionary front, as I explained, right? As far as India is concerned, we believe that India is in a significantly growth path. Several large opportunities are available. At the same time, it's a very, very difficult to win some of those things, because the kind of things that you need to bring them together, because large scale projects, it will be a huge SI-driven project. Some will be your services, majority, some will be third-party products, and the payment terms, that, all of that we'll have to put together. But, I think, a BSNL type of large deals certainly are available in the market, and we always calibrated in terms of saying that which one that we want to participate, where we want to do it. And I think we have taken, if memory serves right, every year we do one of this, at least one of this. For example, Passport Seva, something that we took it up. And then Ministry of Company Affairs is something that we took it up. And it goes back to the times when National Stock Exchange came up, right? From there on, I think we've taken nation-building projects, as we call it. At least one, every 1 or 2 years that we take it and we strongly execute it. And we're proud of the fact that, look, we've been part of that journey, and that journey will definitely continue. And India is a very strong home market for us.
Thank you. Next from Arshada Sawant from CNBC Awaaz.
Good evening, gentlemen. We'll definitely miss having you around, NGS. If you could also give me an idea, because I remember last quarter you said you didn't have a visibility window beyond 15 days. Has that window, I'm assuming it's improved and you've got far better visibility. What does that entail for the future? And Kriti, I remember when you took over, you said it's very difficult to call on when the cycle is going to turn in favor. Given the macro environment and given the data that's coming from US, are you hopeful, if not confident, that perhaps H2 would be far better in FY25, if not the first half?
I think I would say it's visibility is improved, right? But depends on whom you talk to. And if you speak to the guy who is standing next there, Amit Kapoor, UK, he will say, I got fantastic visibility. The guy who is standing next to him is Anupam Singhal, who runs manufacturing. He will say that, look, in North America, it is better, whereas in Europe, it is not that great. So it is a mixed bag. But I think clearly, from 15 days uncertainty to, I think I would say, a quarter of visibility is there, and the customers are taking those decisions. It's not that they're not taking those decisions. But they're also a bit constrained in the fact that, look, what's going to happen to all the elections that's happening across the world, and the whole technology wave, where is it going to play out? Is regulations is going to come or not in the artificial intelligence side? So many of these things are bothering them. So discretionary spend is a bit, lopsided, I'll put it this way, right? But otherwise, we are better today than what we were a quarter ago.
See, he answered for me as well. Like, it will be very difficult to say when the growth would return. But we've been, in fact, this is probably the best guidance we are given, right? FY25 will be better than FY24. And that's what we believe. I don't want to say H1 would be better than H2 or otherwise. Like, I don't want to call that at this time.
Ekta Suri from Zee Business.
Good evening, gentlemen. NGS sir, you will be definitely missed. बहुत बार ऐसा होता है कि स्टार्टअप कॉन्फ्रेंसेस में जब हम जाते हैं तो उनको पता लगता है कि कोई लेजेंड जो है अगर इंडस्ट्री से रिटायर हो रहे हैं. So you know I've talked to a lot of startup founders. वो सब ये कहते हैं कि शायद हम अब मेल करेंगे, हमें मेंटरिंग का एक मौका मिल सकता है. Any such plans for the startup sector?
Nobody has approached me at least.
So maybe they were waiting for you last day.
No. I think opportunity is there. I think there are. One of the good things that I've always enjoyed is talking to youngsters, inspire them, and actually get inspired by them. Right. So I would look forward to such engagements. Right. As long as it doesn't conflict with TCS. Yeah.
Why would we lose the opportunity of using him for mentoring our own people?
कृति सर, आपने बोला इंडिया में बहुत ग्रोथ आपने देखी है इस क्वार्टर में. आप इसको आगे किस तरह से देख रहे हैं और कौन से सेक्टर से आप एक्सपेक्ट कर रहे हैं कि ज्यादा डिमांड आ सकती है? Anything TCS is doing in these elections?
See, for the election, in fact, we are actually doing work for the election commission as well. But we don't do the voting machines or anything, but we do help them. But we do get involved in a lot of projects, and in multiple sectors, multiple government agencies, we are doing projects, and we do expect to get more projects from multiple agencies. Like I said, India is a phenomenal growth story, and what we do today in India is much smaller than what we think is an opportunity in this country. So we would continue to be very focused on this one.
Thank you, sir. And Sameer sir, आप आगे और मार्जिन्स किस तरह से इम्प्रूव करने के बारे में आपकी क्या स्ट्रैटेजी होने वाली है आगे? एंड ऑल्सो इज इट ट्रू दैट आई रेड समवेयर दैट बहुत से ऐसे ग्लोबल ब्रांड्स हैं जो आउटसोर्सिंग में अब थोड़ा कम विश्वास रख रहे हैं और खुद का अपना डेटा सेंटर्स या अपने टेक सेंटर्स में ज्यादा भरोसा दिखा रहे हैं. आपने ऐसा ट्रेंड देखा है मार्केट में?
So ये ट्रेंड नया नहीं है. आई एम आंसरिंग योर सेकंड क्वेश्चन फर्स्ट. But we have always coexisted and for over the years. Coming to on the margins, I think first what we have delivered we are very happy with, and incrementally with focus on disciplined execution, we can look at pyramid, productivity, utilization as the levers, and we believe pricing will be a lever to deliver incremental margins.
Thank you, sir. And when sir, हम BFSI में हल्की गिरावट देख रहे हैं. Is it like now there'll be like, how do I put it? Man power जो लगती है projects को cater करने के लिए, demand जो कम है. Is it true कि अब कम लोगों की जरूरत पड़ी है? And if so, why?
ऐसा कुछ नहीं. जो एक्चुअली जो आप देख रहे हैं डिमांड में और जो नंबर्स में नेगेटिव हैं, उसका कोई कोरिलेशन नहीं है. कि हम लोग जैसा बताया, समीर ने बताया कि बहुत सारा हमारा प्रोडक्टिविटी इनिशिएटिव चल रहा है. हमारे पास मैंने बहुत साल क्वार्टर से बोलते आ रहा हूँ कि बहुत सारे ट्रेनिंग्स को हमने भी हायर किया था, उनको भी ट्रेन करके अभी डिप्लॉय किया है. वो सब चीज़ें मिला के वो हेड काउंट नीचे आता है. तो इट इज़ नथिंग टू डू विथ डिमांड. डोंट, आई वुड रिक्वेस्ट यू नॉट टू कोरिलेट द डिमांड विथ नेगेटिव हेड काउंट.
थैंक यू सर.
Rosuke Hanada from Nikkei.
Hi, good evening, sir. I would like to ask about the impact of the global geopolitical tensions on the financial result. Some people say that some of the Western companies, such as the United States, shift from China to India, especially for the manufacturing sector. Do you believe that the same shift is also happening in IT sector? And if so, does the TCS is benefit from such kind of the global changes? I would like to know about your views. Yeah.
Go ahead. Yeah. No, I don't think, I think while there are supply chain rebalancing aspects that many organizations followed, I don't think it resulted in, things getting moved from one country to the other, right? They always, I think, calibrated the fact that it is, even in the case of China, it's always looked at as China plus one or China plus two. The whole idea was to make sure the supply chains become resilient, right? I think that has been the focus of, at least in our customer base, right? We execute projects in China. We have a strong development center in China. And for our international customers who are having operations in China, we continue to serve them out of China. I don't see any particular pattern by which I can conclude that things are moving from China to India or elsewhere as far as the IT industry is concerned, right?
Varun Sood from Mint.
Hi, gentlemen. Two questions, sir. In this year, 2/3 of your business has grown less than the company average of 4.1%. Depending on the numbers you share with us, geography-wise, domain-wise, and primarily much of the growth is led by India, regional markets, and platforms. So for FY25, should a similar trajectory be seen that some of these regional markets, products, and platforms will lead the growth, or you expect some of the core businesses, that is in US and BFSI, to also perhaps see a turnaround? And is that the reason why, which is giving you confidence that FY25 will be better than FY24? That's the first. The second question, sir, Milind just remarked that we should not look at demand with regards to employee headcount. But if we look at the last 7-8 years, hiring often becomes a leading indicator on a company's performance. This is perhaps the first time in the last 4 quarters, each of your 4 quarters, you've seen an employee reduction, the employee headcount. Yet your growth is a little better. Is this finally changing because at the base and the scale TCS is, that for TCS at least, the future growth will not be linked to headcount, or are we reading these numbers wrong? Thank you.
The first question you asked about regional markets versus major markets. We do believe, first of all, the regional markets will continue to grow, and we believe they should play. Currently, the contribution of the regional markets or the non-major markets, if you can, is quite small. But we believe there's much greater potential in India, Latin America, and other markets, and we should continue to focus. So definitely that will be one important driver for our growth. But having said that, it's the confidence, the reason that we say FY25 would be better than 24 is also based on the fact that we believe the major markets also should start turning around sometime. Like, I don't want to say which quarter, but it's coming from both aspects. It's not purely based on the regional markets alone. The second one, what Milind talked about, is don't link it directly. Is also one, definitely we continue to drive efficiencies. We continue to look at where we can better deploy our associates, and where we can take the trainees ahead of time. So maybe let's say in Q1 or Q2, we take trainees, or headcount may go up, but the training process may take about 6 months or 9 months before we start deploying them. So to say that this quarter the headcount went up, so the immediate next quarter the revenue should go up, may not be a correlation. And 2 factors are at work. Like, one, we take freshers, we continue to train them over a period of time. Second factor at work is we continue to look for efficiency opportunities. So both of these things play, so that there is no linearity between the headcount increase and the revenue increase.
All right, Dibangana Ghosh from Moneycontrol.
Hello, gentlemen. I think most of the questions have been asked already, so I just have a couple of follow-up queries. Firstly, Kriti, to you, I had one follow-up on the India market. So, because most of these are like public service projects, so wanted to understand what is the margin? How does the margin profile play out for TCS here? And beyond public services projects, what are the other opportunities are you seeing in India? Secondly, and also from an overall business and global perspective, which are the other newer segments, areas you are seeing where which TCS is bullish on and might want to expand in FY25? Milind, I have one follow-up. I think last year you were targeting to onboard for 40,000 freshers. So just wanted to get a sense, have all of the associates been onboarded so far? Samir, one follow-up. How much of the margin is coming from slashing subcontracting cost, and will this kind of continue to fall further in the upcoming quarters? And yes, sir, you're probably your last quarter. So just one question, will you continue in any of the other sister companies of Tata Group?
So first on the margin, India margin profile, like we are not disclosing the margin at each segment level or geography level. We are not disclose that, but we always at the same time we are not going to be sacrificing margin in a specific geography just for growth. But each geography has its own characteristic. Okay, and when you look at overall portfolio of regions, it balances out. So we know what margin we need to operate, what is a competitive margin, what we should do in this country. And second, from the client perspective, it's just not the public services. Public services deals that you come to know of them quickly because they are in the public domain. But we do work with many private sector enterprises. We work with many of the large banks in India and other industries as well. So, and we think that there is a greater opportunity to go beyond. From a new segment perspective, definitely we look at, like, we've been invested in geographies like Latin America for a long time. We've been invested in geographies like Middle East and Asia Pacific. We believe all these geographies, particularly all the emerging economies you see, are growing faster than the major economies. So it's an opportunity for us to participate in the growth of these all these geographies, and they are the ones that are looking for global capability and global best practices in each of them. So that's the way we are looking at the new segments.
I had a follow-up, like overall also, which are the newer areas that TCS will be bullish on in FY25? Where do you see the business expanding?
No, like, as I said, definitely this year, if you look at the emerging markets, far outperformed the major markets. And that is definitely area of focus for us in the coming year also. Like regional markets, we expect to outperform the major markets. But the base is small, right? It's how much it will move the needle, we need to see. But we do expect those markets to do well.
And segment-wise?
Segment-wise, I don't think this itself is a lot of guidance for you. But
Milind? Yeah, I think we have onboarded most of the freshers this year, but there are few remaining which will, if not most, if not basically all the freshers remaining will onboard in this quarter.
On the fees to external consultants, I think during the year we have been able to significantly leverage on that lever, and as I called out earlier, we feel we have bottomed out. It will still depend on how the overall scenario plays out during the year, but we have brought it down to a considerably low level, and we should see an uptick from here.
Yeah. As you know, I mean, this is not probably the last quarter. This is the last quarter, right? I'm playing some non-executive role in a couple of other companies, as you may know, and they're all at the pleasure of the group.
We'll now go to the online journalists who've been patiently waiting by. So we'll start with Surbhi Agarwal from Economic Times. Surbhi, you can switch on your audio and video and ask your question.
Thank you, Kritika. Hello, everyone. I just have a couple of questions. One is I wanted to understand that this revenue growth at 3.5% yearly and 2.2% sequentially in the quarter, fourth quarter. What can we attribute that to? Is that majority of that coming from the regional markets, non-core, sort of non-US, non-European markets? And this TCV that you're talking about, 13.2 billion, do we have a split of how much of that is from, say, US or Europe, and how much is that from non-core markets? Could you explain that to us? And also, we haven't heard on really what is your outlook on BFSI and US. If you could just talk a little bit about what are clients saying in these markets, what are the broad trends, what can we expect in 25? It'll help me understand the year better. I have a couple of more questions. I'll pause here.
Surbi, on the market growth, I think we have published that, right? Like, Samir, like that's, we have published
Yeah,
that.
the
Market growth has been published. Like, the primary growth came from UK, definitely on a sequential basis, and regional markets, including India. And I think North America was mildly negative and, or negative, right? North America was marginally flattish, and Europe was also negative, and all the regional markets grew. I think that's been published. In TCV terms, similarly, we have mentioned that North America had a 5 billion plus, and BFSI had a 4 billion plus TCV. And we have not been publishing for, I think CBG had about 1.3 billion TCV. We've not been publishing the TCV for other segments at this time.
Okay, but Kriti, can you give us a sense of where are a maximum of these deals coming from? Like you said, let me word it like this. You earlier spoke about your regional market strategy. Is that paying off in these tough times when growth is hard to find in your key markets of US and Europe? Has your regional strategy played off in growing at such a tough time for the industry?
See, definitely when you see a 20% or 30% kind of growth, you see that it is supporting our overall growth in a tough environment. But as I said, the base is small, so it cannot move the needle very much. But it provides a support at of this one. You can, looking at the number, you should be able to decipher. Like at the 1.1%, maybe about 0.5, 0.6 could be contributed to the regional markets. So you can do the math, or I can do the math. It's not complex. From a TCV perspective, definitely it's coming a lot from the major markets. There would be some contribution also from we do have some interesting deals coming from Asia Pacific and Middle East Africa, but a significant portion still continues from the major markets.
Sure. And on BFSI in North America, would you want to just comment a little bit about what are you seeing, the key trends that you're seeing?
We've been seeing they say it's not that they're hugely negative. They've been sort of flattish, both BFSI and North America. So we do expect them to turn around, but I don't want to call it whether in Q1 or Q2, but we do expect them to turn around sometime soon.
All right. Thank you, Surbi.
Kritika, just 1 second. I have a couple of more questions. I want to know how much is the sequential increase in revenue for Q4? And also, I think the operating margin has come at 26%. However, net margin is at 20.3%. So what is the reason for this 6 percentage point decline? And how much is the net income grown sequentially?
The sequential revenue growth is 1.1%. The operating to net margin, I'll let Samir give you the data.
So from operating to net, we have forex, other income, treasury income, which are positives, and taxation, which is deducted from it, leading to the 20.3%. If you historically look at it, that would be the gap always, and taxation being the major reason.
All right.
Right. But Samir, when you say the margin band is 26 to 28%, that would be of net income or of operating margin? Sorry, I lost you.
It's for EBIT operating income.
All right. Thank you so much and best wishes to NGS.
Thank you.
Next question from Sankalp Fartial from Bloomberg. Sankalp, you can ask your question. Go ahead. Sankalp, we don't have your audio. You'll have to switch your audio on. Okay, I think we have some issue with Sankalp's audio. We'll go to Sai Ishwar from Reuters. Sai, can you switch on your audio and video, please?
Hi, gentlemen. So 2 questions. One quick question is that all the macros we are seeing is that we might see rate cuts this year, and even if you look at the global tech results of Google and Amazon, that they've improved. So what exactly is holding back the spending in terms of the US market? Is it because of the election year? Do you think once that eases out, some improvement would be there? And another question is that 900 million you had given on AI and Gen AI deals. deals. I just want to know the nature of this. Is it eating into the core business of IT spending, or is it coming from the discretionary part? So I just wanted to know how Gen AI will it become a separate revenue stream altogether, which will eat into the core revenues. Thank you.
No, I'll answer the second question first, which is the AI deals. AI deals certainly are not eating into the other typical spend that we do. Most of the AI deals are typically embedded into the large transformation programs or efficiency programs that we undertake. I gave you certain examples like, for example, the pricing and assortment type of thing, or automated maintenance and generation of, let's say, three-dimensional models for home improvements. So many such projects are something we are undertaking. And they're all, focused small projects which are going to help make decisions and help improve the efficiencies at the customer side or at the internal departmental side, right? And as I always explained, the decision to employ AI or deploy AI into the front side, customer experience side, they are being under experimentation, but they are not deployed yet because of the issues related to how do we make things responsible and more authentic at the same time, whether it is regulated or otherwise, right? So first question you want to answer? What was that? What is the first question of yours, Ayeshwar?
Sai, can you take your first question again?
Yeah, I just wanted to know, what is exactly holding back the spending in North America? We are seeing all the macros easing, but what are your clients saying? Is it because of the election year, probably why they're holding back?
As I said, I think, the non-discretionary part of it, there is no holding back. I think we are all executing it. And likewise, if there is a vendor consolidation opportunities that we are bidding, they're all getting executed. They're all coming through, no issues. But discretionary spends, there are certainly things are being held back for reasons that you also highlighted, like it could be election, it could be wars, it could be others. But generally, I think these are the two geopolitical macro reasons. But at the same time, the decisioning on the architectures and how future-proof it is something that is holding back some of the, or delaying the spend on discretionary spend, right?
All right. Last question then from Ayushi Kar. Ayushi, you can unmute yourself and ask your question. Ayushi Kar from Hindu Business Line.
Am I audible?
Yes, Ayushi, go ahead.
Yeah. Hi, gentlemen. I have this question for NGS, sir, particularly because he's leaving this quarter. I really wanted to understand regarding the BSNL rollout and where we are at the moment. And as you hand the torch to the management, where do you see, how would you expect them to take it up going forward?
BSNL program is going well. I think we have installed close to about 10,000 towers worth of equipments. A good number of them are carrying commercial traffic. So we are slightly delayed to what we originally planned. But then, the opportunity is there to catch up. And then much of the validation, verification, integration with the Museum of Technologies that needs to be done is all been done. The coexistence of the new network with the existing 2G, 3G network, they're all validated, they're all working fine. Now we are at a stage where the opportunity is there to accelerate it. All the suppliers who are going to supply the antennas, digital microwaves, as well as the radios, they've all been secured, and they're all will be in place before the end of third quarter. And then afterwards, that we will take a quarter or two to complete the rollout, optimize the network, optimize the radios, and I think we are in a good place as far as the technology is concerned, completely indigenous technology, and it's comparable to some of the incumbent, and all the KPIs are being benchmarked by us, by BSNL, by everyone. So we're very proud of what we have accomplished as a team and as a consortium with CDOT and Tejas Networks and various others. It's been a phenomenal achievement to do something like this at this scale on a completely indigenous basis.
Right. Can you give us, Kriti sir, can you give us an idea or any particular targets of what are your rollout targets going forward in the next year for BSNL?
Yes.
Am I audible?
Repeat your question.
Repeat rollout target.
Yeah, rollout targets for FY25.
As I said, most of the supplies that we need from various partners, we'll get it by 4 September, and we will take a quarter or two to complete the rollout, right? And I think the pace at which we are doing will get accelerated as we move forward. But there are various aspects that we need to worry about. As I said, it's not just the installation, and we need to go about commissioning it, and we need to go about optimizing it cluster by cluster. There's a lot of work to do, but I think, it will take, in my opinion, next about 3 to 4 quarters, we should be able to complete at least the initial contract that we have had from BSNL.
All right. Thank you.
Thank you, Ayushi. We weren't able to get Sankar back, but he has sent his question. So to NGS, how much of return in tech spending is TCS expecting, given that it's widely expected that the Fed could cut rates?
Sorry, I didn't.
Tech spending.
Return in tech spending in North America.
I think tech spending, per se, if you really look at it, the budgets are not contracting. I'll put it this way, right? It's at the same levels as I see it, and in some cases it's increasing, and overall I think the pie in which they want to spend, if I really look at, there are clearly cybersecurity, supply chain resilience, AI related aspects. Payments is a big opportunity. Everybody is looking at payments rationalization, risk management, especially Basel III type of opportunities, and they are all looking at it. So there are pockets in which, they all have earmarked budgets. They want to spend, they want to accelerate it. At the same time, the cloud journey is picking up pace, continue to pick up pace. And there is they all went in with one cloud, and now they are saying that, look, can I go and do a multi-cloud, and can I de-risk it? Especially the need for a private cloud is something coming up, because as they embark and train models for artificial intelligence, using their data, using their knowledge, which one they want to put it in the public domain, which one they want to, how much of it they want to put it in the private domain. These are all the calibrations that are taking place, but I do not see fundamentally anything wrong with that technology spend. And if only, I think some of the macroeconomic situations improve, my own, predicting is difficult, but my own belief at this point in time is that tech spend should actually get increased.
All right, and with that, we come to the end of this earnings press conference. Thank you so much for joining us. Have a nice Friday evening.